Hello again, fellow BeachBum traders. Welcome to part 1 of our weekly trading game plan for the week of January 24th through the 28th. And in part 1 particularly, we're going to talk about how to make money from a bear market. So let's get started and we'll talk about our weekly trading game plan and prepare our strategy for the week of January 24th through the 28th. So let's get started. Okay, firstly, I just wanted to share with you an article from Investopedia, and I'll include this link in the description box below to bull and bear markets. Just you can read this in more detail for yourself, but just so we have a good idea of what we're talking about when we're talking about a bull versus bear market. And you can see, a bull market is essentially a market going up, the economy's sound, whereas a bear market is when the economy is receding and markets are declining. Now we'll talk about, I'm not sure we're actually in a bear market, but we want to talk about our strategies on how we can make money in a bull or a bear market. And we could talk, you hear the terms bearish and bullish, so here's how those are defined. And you can see, a bear market could be more dangerous because of decreasing prices and volatility. We've certainly seen increasing volatility this week, and we've seen, steadily decreasing prices this week, and we've seen a significant reduction in the indices. So again, you can read this in more detail. Bear markets when in decline, typically they define it if it's 20% below its recent high. So again, I think we've reached the 20%. We were somewhere in the 15 to 20% decline range. Whether or not technically we're in a bear market, I don't think that's as important as how do we make money in the various markets. Another important thing to find in here is a nice graph as to the length of the bear markets and then the length of the recoveries for the major declines. So again, you can see, and the drawdown. So how large was the drawdown in the market? And we can see, February the drawdown was 34%. Obviously the recovery was very quick, so the bear market was very short. I think they say it was the shortest in history. And you can see, we haven't technically had a lot of bear markets in the 2000s, 2007, 2000, etc. So again, you can find more information, the characteristics, psychology, etc., and also, how to play these things, what to do in each market. During a bear market, you could see continually losing value, so decreasing prices steadily, a lot of short selling, and flight to safety to defensive stocks. So you can see, utilities, things like that. So again, things to be aware of if we are in a bear market. Where does the money go? It goes to, defensive stocks, utilities, etc. So if you see a flight to those areas, and that's another indication that we might be in a bear market. So, and again, I'll leave this article. You can read it in more detail, but I thought that was helpful. Please let us know in the comments if you find this information helpful. Another useful tool I thought I would share with you, if you're not familiar with it already, is the Fear and Greed Index on the CNN business site. That is a gauge of the overall fear or greed currently in the markets. And you can find this link under the links section of our home page at beachbumtrading.com, bum without the U. You can see we have a number of links, reference links, and you can find the link to the Fear and Greed Index as well as several of the other reference links and tools that we use. So we can see, although the markets were in decline, there was a lot of volatility this week, the Fear and Greed Index is still only sitting at mild fear It's only 43 versus, a 0 is extreme fear, 100 is extreme greed. And you can see the factors in their fear and greed index and put call ratios. There's still a lot of greed, junk bond demand, stock price breadth, and then where the fear is volatility. We've seen volatility. We'll look at the VIX in a second. Stock price strength is poor, so fear, and safe haven demand, so flight to safe havens, and momentum. All those are indicating fear, and you can see the oscillator, etc. So again, you can find this at any time in the links on our home page. And again, if we look at the VIX just very quickly, we can see, although it did spike up briefly, it hasn't peaked yet. So we can see a steady increase in the VIX, steady increase in the volatility. Again, this is another thing they call the fear gauge, is the VIX, and it's really volatility. It's not necessarily fear, but we can see the recent peak is in the 32-ish range, 3150, etc. So we haven't really seen this spike, which is the extreme capitulation, extreme fear. And we may well see this on Monday. Mondays after weekend tend to be volatile, increased volatility. We may get this gap up and spike. As we've mentioned in several of our past weekly trading game plans, we do have a buy out on the SVXY, which is the short on the VIX, sitting at the price for this spike. So if we do get this spike, we will catch a short on the VIX, because just by the definition and nature of the VIX, it retraces, it reverts to its mean, and so that's a very nice high probability trade and a nice profit to be had. So again, if and when we see that spike, the other thing we'll talk about is we've got an FOMC meeting on Wednesday, Thursday, Powell press conference on Thursday. So if we can get that capitulation spike in the VIX and then it reverts, we can make a nice profit on that. But again, we're not seeing, extreme fear. I know it may have felt like it this past week, but the indications are, yes, there's fear in the market, yes, there's declines, but we haven't reached that extreme fear yet. So we may see this in the coming week. We'll talk about the economic calendar, etc., and some of the other factors that may cause that final spike in fear. But all of these say, we have potentially more downside to come. We'll look at the indices again in a minute as well. So the message is, be careful. We haven't necessarily hit bottom. The indications are that we have not yet hit bottom. So we'll look at some of the other factors that may indicate that. Okay, let's quickly look at how the markets finished up on Friday, January 21st. I'm on the home page of FinViz. You can find our affiliate link, as always, in the description box below to FinViz. We can see all the major indexes were down, 1 to 3%, with the NASDAQ taking the biggest hit. We can now see that a majority of stocks are below their 200-day moving average, below their 50-day, had very few new highs, and more decliners than advancers, and more new lows than new highs, and we can also see it ended in bearish territory. So again, we're talking about a bear market, whether technically it's in a bear market or it's just a bearish sentiment. We want to know how to make money in those types of bear markets as well. We see the heat map's going to be, almost entirely red. Again, everything's going down at this point on Friday. If we just look at the news, we see the Ohio plant. Crypto also went down. We can briefly look at that in a second. NASDAQ, worst week since 2020. NASDAQ's down 11%. and then we see bond yield. So again, the typical scenario, we'll see this in the futures, is again, this is the mutual fund philosophy. If stocks go down, you go buy bonds, or vice versa. So given the current economic Fed situation, that may not be appropriate, the wisest thing, but that is what they do. We can see oil is now below 85, hovering. We'll see that in the futures again. We did get stopped out of our short in oil using drip. We made a small profit there, and again, we'll play that again. We'll look at it in the futures again. And natural gas went down. That we'll see that in the futures, and that was a little ironic as well, given the current situations. And then we can see Treasuries, the yields actually decreased and the prices increased. Again, I think that's just the typical rotation. The algorithms for the mutual funds say if stocks go down, you go buy bonds. That drives the price up and the yield down. And again, we'll see that in the futures in a minute. Okay, let's take a quick look at where we are with each of the major indices. We can see here's the SPY. We can see the decline broke down through support, but we can see there's further downside potential to come. So we might get a short bounce, but again, if this bearish sentiment continues, we do have some more downside on the SPY. If we look at the NASDAQ, the Qs, again, we can see it appears to have, reached its previous low or very close. Again, we may get a bounce, but it's broken down through support. It is near to that low. Not to say, it couldn't break down further, but we might get a bounce at that point. So if we look at the Dow, DIA, very similar. We've got this support line at the 340. It's got some downside. It's breaking down through that lower trend line, and again, we've got that pivot point right there, and then we've got some more downside, a little bit more downside. Again, we may see a bounce in any of these short term, and then we may see some further downside to hit that support level. If we look at the Russell, I'm sure that's brutal. It really broke down, and again, when you get in a risk-off mode, the small caps are, particularly anybody that's not profitable, these small caps, not profitable small caps are going to really take a beating, and we can see it's got some major downside, so I would be very careful, particularly with anything that's not profitable, not a value. And again, we've shared ways you can screen for profitable companies in FinBiz with low PEs, so profitable value stocks. You can see our previous video on how to find those. So now if we go, and we'll go ahead and look at the futures and crypto in a second. Okay, if we just real quickly look at the crypto charts in FinViz, you can see the crypto tab charts. We can see all the major cryptocurrencies also, took a dump. Again, this is a risk off factor, is when the markets go into risk off defensive mode, crypto is also going to take a hit, and the stocks, the miners, etc. are going to take a hit as well. So don't think it's necessarily hit a bottom yet in crypto, and we'll talk about Ethereum and our interest in finding a bottom in Ethereum when we get to part 2 probably. So if we look at the futures tab in FinBiz, again the charts, we can see very similar, there's major declines in all the major indices. We can see oil kind of rolled over. There was a lot of discussion on Friday about oil, and they're still talking, because of U.S. companies not wanting to increase production, etc., that oil still could go 100 plus. I've heard 95, 100, 100 plus. So again, If we see that turn up in oil and peak again, we're going to look for another short opportunity using drip in oil. But again, we'll see if it legs up or if it turns back down. We see the spike in the VIX, but we see it hasn't really hit that major spike where you see that very long tail spiking up, and that's what we're looking for. We see natural gas, at peak. We made a nice profit with oil on this upturn, and then it's been declining. It's a little bump on right now, but that's a little ironic because we're getting a cold snap. We've got the Russia issue that will possibly cause them to turn off their natural gas pipeline into Europe, which would cause demand. So we're looking for an opportunity again to, when we find a bottom in natural gas, we'll long natural gas using oil again. So good opportunity for another nice profit, I think, in natural gas. We can see gold rolled over. It went up, peaked, and rolled over a little bit. Silver similarly, but inflation, etc., as well as risk off could be more upside in gold, silver, precious metals. And then when we get to the Treasuries, we'll see that kind of that gap up again. I think that's just a pure rotation. When the stocks went down, the algorithms, the mutual fund algorithm said, "Oh, go buy bonds," and they're not thinking that okay, the Fed's going to decrease purchasing, they're going to raise interest rates, etc. There's also European bonds are starting to pick up a little bit, so you're going to see an outflow from U.S. bonds to European bonds, which reverses the direction that it was going. Everyone was buying U.S. bonds because there was nowhere else to go. So again, I think that was just a very temporary blip, and I think there's significantly further downside in bonds. And again, we'll hear the FOMC meeting press conference later this week, and we'll see that in the economic calendar in a minute. Okay, I just wanted to share with you the CNBC Investing Club email. This is the browser version of the email that I get. I'll put this link in the description box below so you can read it in more detail. Again, I think it's a nice summary, and then we'll add our commentary. This is Jim Cramer stuff, and again, we can see, markets took a beating, Federal Reserve action, and then we can see the FOMC press conference on Wednesday at 2:30. And again, so that's definitely going to be something to listen to watch for volatility and how the market reacts to that. You can read, now the expectation is for at least 4 rate hikes this year. They're even talking potential for 5. People are talking about a half-point rate hike potential. So we've been talking for a while that it's, very hawkish. We're going to get a lot of rate hikes. Exactly how much when, we'll wait and see, but we want to be prepared for that. Going into that FOMC meeting, we can expect more volatility. We can see the discussion on bonds, on treasuries, and also, again, flight to safety, valuations, So again, risk off, flight to safety. We just looked at the futures with, dollar, gold, etc., oil, and again, and we'll talk about this in a minute as well, as there's a lot of companies reporting earnings this week. So we can see his summary of the economic data. Housing starts, jobless claims were worse than expected. We'll see that in my commentary in a minute. That was a negative. And then again, a lot of earnings this week. So please look at the earnings calendar. We have a link on our home page to the investing.com earnings calendar as well. You can go to investing.com and get to the earnings calendar, as well as FOMC meetings, economic calendar, etc. Please look at who's reporting earnings when. Look for, we saw the reaction to the Netflix earnings. That was extreme, right? And it hit, there was sentiment. Other companies in the streaming areas got hit. as well. So again, listen to who's reporting earnings. Is there overreaction? Is there an opportunity there? What are the sympathy plays with this in the same sector, industry, etc., and can you take advantage of that? I know I heard mention IBM's reporting on Monday. They usually report poor earnings, and that has been a good dividend stock play after they dip on poor earnings. So, and again, Wednesday is the FOMC meeting and press conference at 2 and 2:30. Be prepared for that. Thursday is jobless claims that again could cause some volatility. And then on Friday we got sentiment and personal consumption data. So just to throw my commentary in about some of the earnings from last week. Last week we had the quiet period for the Fed, so none of the presidents were saying anything, so that decreased the volatility in that area. Monday we were closed. And then Thursday we got jobless claims worse than expected. So continuing, we're higher than expected. Initial was higher than expected, and the average was up. So the jobless claims area is deteriorating. It's worse than expected. Now, some people say that may slow the Fed down a little bit, but inflation's still very hot. This was natural gas storage was down more than expected, but again, natural gas kept going down, so I think that's counterintuitive. Similarly, crude oil inventories were up. It was expected to be down, and oil rolled over, so again, counterintuitive a bit. And then Friday was options expiration, OPEX, and they said there was 1.3 trillion in single stocks that expired on Friday, and that was the second largest amount ever, and so that could also be part of the reason we saw this increased volatility and also the decline is all these options expiring. And then next week, again Monday, we've got PMI data, so economic data, inflation data. Again, we expect inflation to be high, but it possibly may be waning a bit. And then particularly Wednesday, we've got the FOMC. Again, major volatility if they come out and hike rates, which is not really expected, but we could get something unexpected there, and that could cause drastic increase in volatility and a decline in the markets. Then Thursday, we've got jobless data and GDP, and then Friday, we've got sentiment and consumer consumption and Baker Hughes, so oil data. And again, then look at the earnings calendar on investing.com. There's just a lot of companies. You want to know who they are, what sectors they're in, listen for it, see if there's an opportunity to pick up a value, something on your shopping list if there's an overreaction to their earnings report. So. Okay, let's quickly also look at the markets data we have available on the Markets tab in Webull. I'm on the browser version of Webull on the Markets tab, Market screen. And you can find our affiliate link for Webull, get 2 or more free stocks in the description box below. You can also see our video on how to find more information in the Markets tab in Webull. I just want to quickly look at a few things. We can see the histogram of advancers, decliners, so we can see a lot of decliners. The majority were small, and then we have a longer tail. Another thing that's very interesting is the net inflow. So we can see, the NASDAQ really declined towards the end of the day, but the NYSE was relatively flat. So that's interesting. Definitely an outflow out of tech. But the NYSE was relatively flat. I'm not going to look at the after hours, and I'm not going to look at these in a lot of detail because we expect most of them to be down. But we can quickly scan through the industries to see if we see any standout green. So mostly down as we would expect. Again, mostly down. Consumer defensive is a little green, so that's a little interesting, and that's kind of a typical risk off, safety, flight to safety. We look at ETFs, again, we're going to see they're all down on the indices, etc. We can look at the industries, see if we see any standout industries. Again, mostly red, even energy was red, and it had been positive. So again, consumer defensive is a little green. And then materials, precious metals are up. That's again to be kind of expected. Precious metals. And if we look at the bonds, so TIPS was up. iShares zero coupon, extended duration, and China. We'll talk about how to play some of the global markets as well, and our strategy in a second. So again, this is there's more data. Also, please look at the earnings calendar on the Markets tab in Webull. It gives you a good near-term view for who's reporting when. Again, a shorter list, so you can keep tabs on who's reporting earnings coming up soon. So I hope that helps. And now let's talk about how can we make money in a bear market. Okay, so what's our strategy for how to make money in bear markets? Well, one strategy I like, particularly if you're working in retirement accounts, is using ETFs or leveraged ETFs. And you could see I have a watch list in my Watchlist tab in Webull, and I've constructed this watch list with a number of ETFs, that many of which we'll talk about today. And it's easy, quick and easy to create a watch list. You can have any number of watch lists. You can see I have a number of them, cryptos, etc. And in part 2, we'll talk about the bullpen. We'll talk about the weekly watch list, etc. But I have one that has all the ETFs that I like to watch. And again, these are ways you can play, bull or bear markets. And that's what I would recommend. ETFs also reduce your risk for single stocks. If just one reports bad earnings, that stock gets hit, but an ETF again reduces the risk. And I need to get more nimble at being able to catch these guys as they do reversals, start to run. I do have some additional automation now that will tell me when these are moving up, breaking out, but I'd like to get more automation that identifies reversals quicker and breaking down, moving down. But these ETFs are great for, again, if we're talking about a bearish market, these are all ways where you can long or short the indices. So the short version, if the market's going down, you see these short leveraged ETFs start moving up because they're inverses. So when the index goes down, the inverse goes up, and you can long these indices. Again, in a retirement account, you can't short any stock, etc. So these indices give you a way to play a bear market because you can long the inverse ETF, which is then shorting on the index. So here are the list of ETFs that you can long or short the major indices. The Qs to long is TQQQ, short is SQQQ. The ones we like for the S&P long is UPRO, UPRO, short SPXU. The Dow, up Dow, and short Dow, SDow, to long short the Dow. This should be Russell 2000. To long the Russell 2000, it's URTY. To short the Russell 2000 is SRTY. And then the VIX, you've heard us talk about a number of times to long the VIX. So when volatility starts increasing, and I know some people caught this and made a nice profit this week because the VIX was climbing. So if you were long UVXY, you made a nice profit. Again, when it spikes and peaks, we've got to buy out to short the VIX using SPXY. So again, if you what I'm recommending in a bear market or really any market is if you can nimbly catch the swings in these leveraged ETFs, there are opportunities to make money. And in any kind of market, you just have to catch, which one's starting to run, and you can long that leveraged ETF and make money and just nimbly get out. Similarly, in Treasuries, if you want to play the Treasury, the 20-year down, there's TMV. We've watched that. We've played that in the past for leveraged ETF down on the Treasuries. So that's down on price, up on yield. If you want to play them up, and we are looking for a bottom in these Treasuries. Once this hits bottom and starts swinging up, we're probably going to long Treasuries. So to long the 20 years TMF, to long the 7 to 10s is TYD. We also talked about global markets. You've seen some major swings in China recently. They loosened some of their mortgage, etc. restrictions, and it started to climb. We don't like individual stocks in China. Again, I think the political situation is very volatile. But again, this allows you to mitigate some of that single stock risk, etc., smooth out some of the risk. When China starts running up, you can use YINN, yen, to long China, and you can use yang to short China. So again, as these volatility events occur in China, there are opportunities to make money if you can nimbly jump on and long short China. India's been doing very well, and I've recently been turned on to the long in India. It is running up. We would like to get an opportunity to go long India. We will be looking for other global indices. I expect over time, if the U.S. markets continue to decline, people are going to be looking globally, and you're going to see money start to flow to other global markets. So we'll be looking for opportunities in other global markets. But again, these are ways you can play at least some of those. Commodities, the ones we've talked about most recently, is longing and shorting natural gas. You can long natural gas using boil, short using cold, long oil using gush, short using drip. And again, you can play these swings going both ways. We need to be more nimble, and when these, when our long and boil rolled over, I should have gone short cold. I didn't catch that. Same way with oil. When our drip got stopped out, if it looked like it was going to keep going down or turning back up, we could go long gush. Here's another ETF that is recently developed to be an inverse to short the ARK Invest Cathie Wood's ARK-K ETF. So essentially, this SARK is shorting the ARK-K ETF, and you saw, the ARK-K had a major decline. If you were then long this SARK ETF, then you made a lot of money recently. I guess there was a short bounce in ARK-K, but I think it declined further on Friday. So again, I think those are good strategies. Well, again, you can make money in a bull market. You can make money in any market. It's just a matter of identifying the current trend, being ready to jump on, knowing what are you going to play if the markets start going down, then what are you going to jump on and ride that down. When it reverses, you jump off and you can play it the other direction. So again, we can make money in any kind of market, bull markets, bear markets, range bound markets, you name it. There's a way to make money. So I hope this all helps, gives you a strategy to make money in a bear market, or again in any kind of market. And now we're even talking about global markets. So we'll look for more opportunities in other types of markets as well. So I hope that all helps. Please let me know your thoughts in the comments below in our Facebook group. We hope that you like this video. Please smash the like button so that the YouTube algorithm will share this video and all of our videos with more of your fellow BeachBum traders. Please share it using the share button. And if you're not already a subscriber, we hope you will choose to subscribe and hit the bell icon to be notified as we publish additional videos. We hope you'll come back for part 2 of our weekly trading game plan tomorrow. We'll talk about changes to our watch list and any additional strategies that we come up with tomorrow. So we hope this all helps. Good luck and have a great trading week. We hope that you like our weekly game plan for the trading week for this week. Thank you for watching the video to the end. If you found this helpful, we hope that you will choose to subscribe to our BeachBum Trading YouTube channel, and please click the bell icon below to automatically be notified whenever we publish a new video. Please also share this with your fellow traders and friends via the share button included below. And let us know if you found our weekly game plans helpful in the comments included below. And let us know how we can improve. What would you like to see more, less of, etc. Thank you again for watching. Good luck and have a great trading week. Bye.